Welcome back to The Breakdown with me, NLW. It's a daily podcast on macro, Bitcoin, and the big picture power shifts remaking our world. What's going on, guys? It is Wednesday, November 12th, and today we are talking about China accusing the US of stealing $13 billion in Bitcoin. Before we get into that, however, if you are enjoying The Breakdown, please go subscribe to it, give it a rating, give it a review, or if you want to dive deeper into the conversation, come join us on the Breakers Discord. You can find a link in the show notes or go to bit.ly/breakdownpod. Well, friends, China has accused the US of orchestrating a $13 billion Bitcoin theft. The allegation was made by China's cybersecurity agency and refers to a 2020 theft from the Labuyan Bitcoin mining pool. Over 127,000 Bitcoin were stolen from the pool in December 2020, but the theft wasn't widely known until Arkham Intelligence reported on the incident this August. Labuyan had only been created in April of 2020 and quickly grew to become the sixth largest pool on the network. It shut down the following February after the hack wiped out most of its holdings. At the time, investors speculated whether the Chinese government had shut Labuyan down or if they had converted it into a private pool. Arkham's research uncovered that the Bitcoin had in fact been stolen. They speculated that a weakness in Labuyan's private key generation had left them open to brute force attacks. Now, this is the largest Bitcoin hack of all time by dollar amount, representing around $3 billion in Bitcoin at the time of the attack. The Bitcoin didn't move from late 2020 until July of last year when they were moved into government wallets. There doesn't appear to have been any attempt to launder the funds as we would typically see from a North Korean hack. A new report from the Chinese cybersecurity agency describes the attack as a state-level hacker operation likely led by the US. They noted that the quiet and delayed movement of the funds suggested government activity rather than a typical hacker. The agency further claimed the Bitcoin are related to a US case against Chinese national Chen Ji. She is the chairman of Prince Group, which the DOJ is alleging to be a multinational criminal organization. They are alleged to have run a vast pig butchering scam network out of call centers in Cambodia, as well as one of the largest dark web markets called Huyan Guarantee. The allegations are gnarly, discussing large-scale human trafficking and forced labor used to man the call centers. Charges against Xi were announced in mid-October of this year, with the DOJ boasting of the largest ever Bitcoin seizure alongside. The numbers line up with the DOJ filing for the forfeiture of around 127,000 Bitcoin at the same time. An account of the seizure was completely absent from the press release. It said that Xi had the private keys to the Bitcoin wallets in his possession, but given Xi is still at large, he can't have voluntarily turned them over. Many suspected government hacking at the time, but we had very little information to go from. The Chinese cybersecurity agency is now heavily implying that state-sponsored hacking was the mechanism, stating, "The US government may have already used hacking techniques as early as 2020 to steal the 127,000 Bitcoins held by Chen Ji." They continued, "This is a classic black eats black operation orchestrated by a state-level hacking group." Xi and Prince Group released a denial of all allegations on Tuesday, their first communication on the matter, and interestingly coming less than a week after the allegations of state-sponsored hacking out of Beijing. Now, there has been a huge amount of fresh attention on this case over the past week. 26 million worth of luxury cars in Taiwan over the weekend, and Bloomberg reported on a multi-million-dollar embezzlement from Xi's Singapore family office. This isn't just some unknown scammer hiding out in Southeast Asia. Xi was a prominent businessman in charge of a large corporate empire with very obvious and vast wealth. In that light, it's interesting to see Beijing weighing in on the situation. The agency report doesn't actually lend any real support to Xi. It's merely a technical postmortem designed to educate Bitcoin users in China. The report does seem to imply that Labuyan was not related to Xi and the asset seizure was used as a cover for the Labuyan hack. Regardless of the specifics, it's a wild allegation to claim the US might have a team of hackers on the payroll going after Bitcoin owned by international crime organizations. So, do we think that's really plausible, and what are the implications if it's true? First of all, it's important to note that this doesn't have anything to do with systemic problems with Bitcoin or a suggestion that the network is hackable. This was a very specific problem with a private key generator. Security expert Taylor Monahan took a look at the hack back in October when the indictment was unsealed, concluding, "I guess the one takeaway is that this dude, Chen Ji, or his friends or services he was using, or his dev or whatever, were apparently absolute shit at generating wallets with enough entropy. For years. RIP. As for whether the US government has a crack team of crypto hackers on the payroll, Mike Solana of Pirate Wires is unconvinced, tweeting, "Would be cool if our government were this competent." Now, while the idea of state-sanctioned hackers going after Bitcoin held by criminals seems a little far-fetched, it might not be all that out there. This was actually a serious proposal put forward by Chris Perkins, the president of CoinFund, and Chris Giancarlo, former CFTC chairman, in February of this year. They viewed the sanctioning of state-sponsored hacking as a solution to bad actors like North Korea's Lazarus Group. At the time, the $1.4 billion Bybit hack was fresh in everyone's minds, and radical ideas were being floated. Perkins and Giancarlo suggested the US should revive the 200-year-old idea of privateers. pirates who had a government license to attack the ships of bad actors on the high seas. They argued that a crypto privateer initiative, quote, would deliver a low-cost, flexible, and effective option to address unconventional national security challenges. The concept was later contained in a bill proposed by Republican Congressman David Schweikart in August. The bill would codify and expand the powers of the president to grant these privateering licenses to hackers. Now, it is worth noting that if this were a state-sponsored attack, Chris Giancarlo was one of the few crypto experts in the previous Trump administration that could have given the green light. The other note about this is that Bitcoin now seems to be part of a geopolitical squabble that's becoming quite significant. When the seizure was first announced, it was basically assumed these 127,000 Bitcoin would find their way into the strategic Bitcoin reserve in due course. Now Beijing seems to be making a claim that they weren't seized from a criminal, but rather hacked from an unrelated Chinese mining pool. Not like these two countries don't already have enough to be going on, but another $13 billion in a US state-sponsored hacking episode could easily spark a fresh dispute. Legacy internet and infrastructure are brittle, plagued by downtime, coverage gaps, and outdated financing models. Communities and builders are left behind while capital sits locked out. Althea is changing that. Since 2018, their technology has powered resilient, sustainable networks across the US and abroad. With Althea L1, they built the world's first blockchain purpose-built for utilities and telecom, turning infrastructure into a transparent, investable asset class. Through liquid infrastructure, networks can now be financed in real time, operated more efficiently, and scaled to meet the $3 trillion telecom and utilities market. This is fintech for infrastructure, connecting capital directly to builders and returning revenue seamlessly to funders. No middlemen, no bottlenecks, just sovereign, resilient infrastructure that works for people, communities, and investors alike. Learn more at althea.net and find them on Kraken to join the future of infrastructure finance. Next up, moving to a totally different side of the industry, Coinbase is bringing ICOs back to the US with the launch of a new token sales platform. The platform will allow retail investors, including non-accredited investors in the US, to participate in token launch sales. The first token to be sold is Monad, with the sale taking place next week ahead of mainnet launch the following week. Now, if you weren't around for the ICO craze in 2017, then you missed one of the most insane periods in crypto history. For a very brief window, token projects could sell, or at least were selling, directly to US retail investors. It was a little bit like the NFT craze, but instead of monkey pictures, founders were selling the concept of a crypto token. In most cases, the projects were little more than a white paper and a deposit address. Now, I actually think that the ICO movement has been a little bit maligned by history. There were, in fact, many founders who were generally excited about themes of decentralization. However, things did get totally insane, and whatever legitimate excitement there was very quickly overwhelmed by a spectrum of scammers and hucksters who pumped hundreds if not thousands of vaporware tokens that quickly crashed and faded from memory. Now, it is worth noting that each token launch required a significant amount of technical skill back then, meaning that 2017 did not see millions of token launches like we experienced during the meme coin craze. For that reason, and due to the very primitive liquidity conditions in the crypto space at the time, the ICO boom was a relatively straightforward trading environment. Most of the small handful of coins launched in a given week would pop, traders would dump their bags and crash the chart, and then everyone would show up and do it again the next week. This eventually led to a very adverse environment for fundraising, which was ostensibly the point. Traders would clog Ethereum with transactions, desperately trying to get an allocation that could sell out in seconds. These buyers typically had zero intention of sticking around beyond a day or two. By the end of the ICO boom, there was only the barest of pretense that any of this stuff does anything, and eventually it all came crashing down. In bringing back ICOs, Coinbase has thought through those issues and proposed some sale rules to mitigate them. First, this is a curated sales platform, so we won't get the same volume of vaporware we saw in 2017. Coinbase is planning to conduct around one token sale a month. Second, Coinbase is going to prioritize filling smaller allocations first in an attempt to avoid large whales buying up the entire supply. Controversially for some, token buyers who sell their allocation within 30 days may see smaller allocations on later token launches. Coinbase says this is designed to, quote, prioritize access to a project's real users. Gargo, one of the founders of the Bored Ape Yacht Club, wrote, "If you sell your allocation immediately, you're punished. Welcome to the world of the crypto credit score, citizen." In addition, Coinbase is attempting to keep the early investors from using retail as exit liquidity by setting a few standards. They've laid out key disclosures around tokenomics and identity of the team, which sound a lot like the proposals coming from regulators. Interestingly, the Monad documents include a disclosure of which market makers are participating in the terms of their token loan. Now, this type of disclosure is table stakes for an IPO or an ETF listing, but hasn't been a part of token launches in the past. Issuers and early investors will also be prevented from selling for 6 months after the public sale. Finally, Coinbase are charging zero listing fees to projects, with many people drawing the connection between the fight over Binance's listing fees from last month. Juan Leon, the senior investment strategist at Bitwise, wrote, "Remember the 2017-2018 ICO bust? The Wild West of token sales was defined by gas wars, anonymous teams, rampant scams, and immediate whale dumping. Coinbase just created a regulated IPO model for crypto tokens, and it's a direct answer to every one of those problems. Now, if you're wondering about the legality of all of this, Coinbase seems to think they're in the clear. Jess, the founder of Seed Club, asked Coinbase to clarify and got this response. Quote, token sales don't involve the sale of securities, so the accredited versus non-accredited distinction isn't applicable and any retail trader on Coinbase in the US can participate. Meaning it seems like Coinbase has strong legal advice that the Howey test doesn't apply in this case. Ejaz, a former Coinbase and Consensus employee, wrote, Coinbase launching an ICO platform is all the evidence you need to know the Clarity Act is getting passed. Launching a token used to be enough to send you to jail in the US, and now it's about to be a legal instrument to raise capital, govern vast swaths of internet-native capitalists, and return profits in the form of dividends and buybacks for anyone, anywhere in the world. I think many are underestimating what this means for the industry at large. For some from the outside, it looks like a bad idea. Alex Johnson, a fintech commentator, wrote, didn't we do the ICO thing already, and didn't it not go very well? But frankly, things like meme coin mania seem like a direct result of not having a path for legitimate projects to launch in the US. Sure, maybe it'll end up the same way it did in 2018, but there are many people that think it's worth another try. Robbie Ferguson, the co-founder of NFT platform Immutable, wrote, at the start of the year, the word ICO was enough to get you on an SEC watch list. Now Coinbase, a publicly listed company, is launching an ICO platform with the SEC's blessing. The next decade of crypto is going to be remarkable. Perfect end for today's breakdown. Appreciate you listening as always, and until next time, be safe and take care of each other. Peace